please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a start in the red for our markets and continuing to be so. So currently the Nifty is down around, I don't know why we're pulling up the Nikkei. Yes, actually we're under pressure because of the pressure that we're seeing in the global markets as well. So the Nifty is down around 0.5%. The US ended lower yesterday. Asia is lower this morning as well. Advanced decline ratio weak, and we have a lot of stocks in focus to talk about. It is IT stocks which are under pressure, bank stocks which are under pressure, Reliance Industries which is in the red, and from the broader markets, a lot of stocks buzzing around. Mindtree after there was a brokerage report on it, and something like Jubilant Industries which is spiked up around 9 to 10 odd percent, and other stocks which continue to gain from that real speculative list is PC Jewelers, Quality, Mansapasand Beverages. So just keep your eye out on the kind of stocks which are moving in the broader markets. Hi, Prashant.
Ekta, hi. I mean, I think, yesterday at 4:30 we had put out a graphic which essentially talked about the gains the market has had over the last 6 trading sessions. And I mean, you can juxtapose that and look at the correction today. And I think it would, in a way, you'd say, okay, well, we rallied 300 points in the preceding 6 sessions. And the market's giving up 50-60 points, so not that big a deal. The Bank Nifty rallied 600 points in the preceding 6 trading sessions, and we're giving back some, so it's not that big a deal. I think, I mean, that would be, in a way, the correct way to look at what we are seeing as far as action is concerned. I mean, just the one thing from global markets which is noticeable is that even though we got that 25 basis point hike, even though, I mean, the statement, etc., people said it's hawkish. But post the press conference, once the entire event was through, I mean, the dollar did not rally at all. I mean, the dollar actually weakened post that. I mean, the dollar essentially did not do what many anticipated it to do. And I mean, the 10-year, for example, failed to cross the 3% threshold. And it's down right now, the dollar index, for example, and is doing different things against the G10 currencies and emerging market currencies. So let's see. But I mean, I think, the analysis post the Fed, I think the entire event per se, after listening to the Fed chairman also, is that, I mean, they're not actually as hawkish as the hike itself shows. And maybe they're already a long way into getting to that sort of neutral zone, neutral rate zone. So, I mean, that's essentially 2 bits on Fed. We've been, of course, getting your opinion over the last couple of hours, and we'll get you more as the day goes along. But for now, we're down on the market here by about, 60 odd points on the Nifty, 61. Mitesh Thakkar of miteshthakkar.com is with us here for some trading advice. Mitesh, good morning. Good to have you here. Your sense on things, and what would you trade?
Yeah, so I think, couple of observations first on the indices. I think the Nifty has hit 10,780, which to me is an important zone given the fact that a couple of intraday averages kind of converge over there. So in case we have to have further decline, I think 10,775, that gets taken out, then we might drop by another 70 to 80 to 100 points and test the 10,700 mark. Also on the Bank Nifty, the similar setup is happening. 25,500 is an area where intraday averages are converging, and we had a low of around 26,500, and we had a low of 26,503. So in case you break 26,500, then I think we might have a weaker expiry. Else we might just expire around this 26,600 kind of zone.
Okay, what would your stocks be, Mitesh?
Yeah, 2 stock calls, one buy and one sell. I think technology stocks after a good rally are showing signs of profit booking and a pullback. So Tech Mahindra is now showing signs of breakdown on the intraday chart. So sell with a very tight stop at 705. Look for a mild decline to about 682. And VGuard is giving some kind of pricing volume breakout in the last 1 hour chart. So that's a buy with a stop below 210. Look for targets of 228.
A couple of Twitter queries for you then, Mitesh. First is Sri Harsha wants to know if TechM is a good buy at current levels for the long term.
See, as I said, I think it's made a mild topping out pattern. So I think if someone wants to enter Tech Mahindra for long term, definitely it's a buy. But I think a staggered entry could be recommended. Try to buy it closer to about 680 and then buy all the way down, possibly to about 650. I think that could be good accumulation zone on the medium term charts, and I think eventually once 720, 725 is crossed, I think the stock would head towards 807.
All right, Mitesh, we speak again. Thank you very much for your time. Appreciate you joining in on CNBC TV 18. All right, we move on to the other big story, in a way, a marker, a day which I think is one for the ages, actually. I mean, IT major Infosys has turned 25 on the exchanges on Dalal Street. The first pure IT services company to be listed in the exchanges, completes a quarter of a century since listing. It's actually truly been a wealth creator. I mean, the numbers, of course, in terms of if you invested 100 rupees, how much it would be worth now. I mean, this is all part of folklore. One of the men who were instrumental in bringing the company to the exchanges, and I mean, I think that story is also legendary, is Vallabh Bhansali. He's chairman of Enam Securities. He's joining us right now on this special day. Mr. Bhansali, thank you very much. Great to have you with us here. Prashant this side. I mean, your thoughts as Infi turns 25 on the exchanges today, sir?
Well, my thoughts are twofold. One, I feel very happy for the company, shareholders, founders, management, employees, customers. But more importantly, I feel very happy that the company is listed at a time when India emerged from, darkness created by itself, on the controls and so on, and how it played a torchbearer of values, vision, execution, scalability. So these were the factors that were very important for the country as a whole. So I particularly feel happy that, after 25 years, it's a good occasion to revisit those soft factors that, really shaped not only this company, but to some extent, or at least quite an extent, shape what has happened in the last 25 years.
Mr. Bhansali, hi, thank you very much for joining in. Well, we've spoken a lot in terms of what the journey of Infosys has been for the past 25 years. If you have to give a roadmap on what Infosys should probably focus on to chart its growth trajectory for the next 25 years, what do you think it should be? What should the priorities be from here on?
For every business, customer is king. And if you lose focus on the customer, you lose it all. Of course, next comes execution, and execution has not only the technology and resources and people, but also processes and culture. So I think those are the three things that Infosys set out to do quality work. Mr. Murthy was a much sought after technology professional when he was caught by the enterprise bug. And because he was so free thinking and ambitious and idealist, he had to be an entrepreneur. And I think that's the spirit that Infosys has to continue, that to be confident about its values, about its ability to create value for shareholders, and work backward to create that culture within the firm. So it is being talked about, but may not be talked about enough, that how all the values and idealism overlapped and synchronized with what was necessary for the customer. And that's how the company was able to get a higher margin, higher growth than the industry. And I think the same has to be looked at in the current context by the company. So customer, employee, and an enabling culture in which the employee can create huge value for the customer, and eventually it all boils down and falls down to the shareholder's lap.
Mm-hmm. Mr. Bhansali, Infosys was, just to take away one of the things they in a way standardized in India Inc. is giving out detailed disclosures, putting out a guidance, for example, right? I mean, American companies used to do it at that point. After that, after Infosys started the practice here, we got essentially large companies, even smaller companies, giving out guidance. We recently had Warren Buffett and Jamie Dimon in the US essentially blaming the practice of guidance for short-termism. They said, well, we're going to persuade CEOs to stop the practice. What are your thoughts on this, sir, in the Indian context? We spoke with Mr. Damodaran, ex-SEBI chairman, who said that, well, in some cases, guidance has become the master and the actual result is the servant. What are your thoughts?
Well, we must look at the history of guidance, particularly in the context of Infosys. that it did not begin with quarterly guidance, it began with annual guidance. And I think what Warren Buffett and Jamie Dimon have taken up is the quarterly guidance. If we see that today's stock market has a very skewed playing field, that there are individual shareholders with limited ability, and then there are institutional players with armies of research analysts and so on. And therefore, how does a company try and create a level playing field? It is from that point of view that good companies feel that it is they feel persuaded to give some kind of guidance. So as long as that guidance is in the context of the way business is done, if the business can think of itself only in a quarterly manner, so be it. But if not, since most businesses would have an annual plan or a midterm plan which is beyond 1 year also, if they are giving guidance which is in line with how the business is actually thinking, I think it's a good service to shareholder. Where instead, if the company starts feeling that, look, my share price will get affected, then I think it's clearly a bad thing. So as long as the company speaks its mind, speaks about its goals, that it really is setting for itself, I think it is fine. It's a good practice. And it puts pressure on the company to stand honest to that guidance. You don't have to meet the guidance. Guidance is primarily telling the shareholders and world at large as to what are they attempting to do. So I think it's a good practice if it is practiced in that manner.
Mr. Bhansali, the one other thing which is really linked to Infosys is corporate governance. They really brought about the standards of corporate governance when you talk about India Inc. However, recently there have been examples, of board issues for certain companies as well as, say, audit issues for some of them as well. In your opinion, do you think that maybe we have a longer walk ahead of us to reach the standards of corporate governance as a whole compared to what Infosys set?
I think your question doesn't beg an answer really. It is there. Yes, it is an unfortunate phase through which we are going. But I do believe that it's only a phase. Sometimes, such transactions and events bunch up and therefore we start feeling as if we have lost the plot. I don't think we have lost the plot. I think on the whole, the corporate governance in the country is improving. But I must also mention that there are two things that go hand in hand. The regulatory overreach and then the underperformance by those who are the custodians, whether it be directors or it be auditors. We need to create a climate in which the regulator is not seen as a victimizer, looking for victims. And sometimes, if you do not let really fiercely capable and good people come to boards because they don't want to get into this overreach, then you are weakening the whole institution of independent directors. So I think dividing the lines as to, what is the responsibility of independent director really, what is the responsibility of an auditor really. So if I were to say that as a regulator, I want the auditor to perform my role, the director to perform my role, and if something goes wrong, I'll victimize everybody. At the same time, the auditor and director not walking away from their responsibility of being custodians. So I think we have not had enough debate. I think even the way our laws and rules are structured probably have gray lines. So we need to, look at some of that stuff also. At the end of the day, I think some of this reflects the large society at large that we really are. So if a society at large it does not have a great value system, some of it will reflect from time to time. Having said all that, Ekta, I must say that I am an optimist. I believe that we have moved a long way since Infosys showed the path. There are n number of companies today trying to walk that path. We will have aberrations, and they have come in a bunch at this point of time. I think we'll learn from it as a system and move to a better place from here. I have no doubt.
Mr. Bhansali, just one last question, sir. And since we have you, I cannot but ask you this and tap into your market acumen. This market recovery from the lows has been accompanied by rising bond yields. The difference between where the RBI rate is at and what market rates are indicating, is also pretty large. We got one rate hike. Many believe that we'll get one more and that's it. I just want your thoughts whether, do you believe that is most likely the case, and what is your outlook for the market itself broadly from here?
I think we are in a turmoil period globally, also with the US raising rates and dollars trending. Oil seems to have, become quite after, getting onto a boil. Plus the election here, plus the impact of oil and rising dollar on our economy. So I think we have a lot of macro variables at this point of time. The market, and as far as your interest rate is concerned, we have become data driven. After a long time, we saw some hardening of inflation. But the picture on wholesale index or the consumer index, the basket, etc., is quite moving. So if we have a good monsoon, maybe we just have one hike and then that's it, because I think at least the supply side is doing extremely well. And if the oil quietens, I think we will have a robust economic performance for one more year, and then the market will follow. But the market will continue to be sheepish given various macro factors at national level and at international levels.
Mr. Bhansali, it's a pleasure, sir. Thank you very much for joining us here today as Infosys turns 25 on the exchanges, and of course sharing your thoughts on a variety of issues. Vallabh Bhansali, the chairman, Enam, with us on that conversation. We take a very quick break here, the first on the show, and we have sobering news. I mean, I think Mr. Bhansali wrapped up by pointing out that markets will remain sheepish. I don't know if you can describe a 70-point cut as sheepish, but we are down 70 points. And when we started, we were down about 55, just under 60 points actually, so it's gotten a little worse. The mid-cap index is doing better. I think the small-cap index is doing better as well. I mean, we just got about a 0.25% cut in the mid-cap index compared to almost a 0.6, 0.7% cut on the Nifty. We take a very quick break. We are back, and we have the management of Mattoon joining us when we return. Interesting conversation with George Alexander, Managing Director at the company. Back in 2. The markets not doing too good at all. I mean, things are down and out, and they've gotten worse actually from the time that we began the show by about 10 or 12 odd points. We've got Mattoon Finance now joining us to talk to us. So Antique, which is a sell-side broker, they've written a report and they believe that the gold financing business is in a sweet spot as growth, according to them, has returned. Is this true, and how true is this? George Alexander Mattoon is Managing Director of Mattoon Finance. He's joining us right now on the show. Mr. Mattoon, thank you for your time. Appreciate you joining in. Antique is saying that the gold business, the gold finance business, is in a sweet spot. How would you describe it, sir?
Thank you. And I think sweet spot is sweet because things are looking better this quarter, and probably in the last 5 months, things are looking better for the gold finance companies. We see a demand pickup also. Earlier, last year, our growth, AUM growth on the gold loan business per se was less than 10%. This year, we should expect in excess of 15% this full year for the gold finance companies. Other than that, we see very little loan losses, etc., due to NPA or such things, and in that respect, also profitability also should not be a concern. It should be positive in the coming year.
Mr. George, if I just look at the past statistics, the last time you saw a double-digit growth rate in your credit was all the way back in Q4 of FY17, where it was, I think, around 11 to 12 odd %. Antique is expecting a pickup in terms of credit growth to double digits this year. What is your estimate in terms of what you could do and when you could probably get back to those double-digit levels in terms of credit growth?
Yeah, that's what I said. In the gold loan section, gold loan business, we expect more than 15% growth in the full year. Okay. So I think that's a double digit, which probably he would also be talking about. Okay.
The other key factor is your gross NPAs. I think they were the highest level that we've seen in multiple quarters, almost 7% in terms of gross NPAs for Q4 of FY18. What is the kind of guidance you can provide us on the same, and what's the visibility also that you have in terms of, say, recoveries?
Okay. See, we have always been talking about the NPAs in gold loan business. There are actually the NPAs, none of the NPAs in the gold loan business result in a loan loss. In the last several decades, we have not lost even 1 rupee because an account became NPA. NPA is only technical NPA just because the period has elapsed and we have given more time to the customer to redeem his gold. So NPA has never been an issue. This time, one of the reasons why this has gone up is also because the new classification, the borrower-wise classification of NPA. A borrower who is having an NPA, if he takes a gold loan tomorrow, ab initio it becomes an NPA. So that is also being factored into it. So otherwise, the NPA has come down, but NPA we are able to carry it in our books because we will never lose money. Rather, we will get good support from the customer, and mostly we will close it with full interest. If you auction it, we may not get only maybe 50-60% of the interest due. So it is better to give more time. That's what we have been doing over the decades, and it has only helped us in the business. We have never lost even 1 rupee because of NPA. So NPAs for a gold loan company is a non-issue.
So, I mean, Antique also says that you're investing the cash which the gold business throws up into other activities like housing finance, etc. And the subsidiaries themselves are doing pretty good. Could you tell us what this quarter so far you've seen? In the home loan business, we see a good pickup. See, last year the AUM, it is a 100% subsidiary. Last year it was about 1,400 crores, and this year we are expecting it almost in the region of 2,800 crores to end this year. So also the microfinance Belstar, which is about 1,100 crores of assets, so they should reach about 1,900 crores this year. We have also started a salaried personal loan in a very small way on a test basis, on a pilot basis. We have about 25-30 crores of AUM there. We would like to grow it also maybe to 250 crores by the end of the year. So we are looking into that area also for diversification of the assets. And today we have 10% of our assets as non-gold loan. End of the year we should have it 15%, and next year we should have it 20% of our assets as non-gold loan portfolio.
I know it's a small part of the business right now, but if you could just give us a sense in terms of the NPA trends within the MFI business as well as the home loan business.
In the home loan business, NPA is very much under control. It is, I think it is below the industry. It is about, I'm not exactly sure, 0.4. It's 0.4% only in the home loan. In the microfinance, 0.7 is the par.
Okay.
So both are well within the control limit and much better than the industry average.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Mattoon Finance. We need to get talking about the commodity segment now. We have Navneet Damani of Motilal Oswal who's with us. Navneet, hi. Over to you then. If you could just list out your strategies for us.
Well, we have a buy call on gold. We've seen that no major reaction has been seen even after the Fed meet and continuous hawkish stance of 2 rate hike possibility. So in all, I feel that much of the bad news for gold has been discounted, and probably 1290 on the comments could be a floor. On the MCX, we would like to buy around 31,200, which stops below 31,000, targeting 31,450 on the upside. Similarly, we have a buy call on silver that we've seen in the last few days. Silver has been showing more strength than gold and has been outperforming the complex. Silver could be also a buy candidate with around 40,850, which stops below 40,550, targeting 41,300 on the upside.
Thanks very much. Appreciate you joining in with that quick run through of the strategies. On the commodity side, we take a very quick break here again. We're down about 70 points, 10,787 is where we stand. Ashwini is with us with his idea on the market, his trading bets. Back in 2.